Good afternoon, everyone. This is your editor-in-chief, John Darcy, here for the daily recap. I will make it short and sweet and let you get back to your March Madness action, but it was a quiet day in the market. With maybe a lot of people were watching basketball games rather than trading because we had a gap up this morning, sort of a light drift higher the whole day on very light volume, one of the lighter volume days we've seen recently. But this upper level wedge continues to build. Composure remains bullish despite some headlines and some faulty signs under the hood. But for now, the action remains bullish, and we let the price action do the talking. So that's the way we continue to lean. Even though you don't always have to be all in or all out of the market. Sometimes a less is more approach is better, and that's what Scott has been talking about all week. And I think that is the best approach right now. We do have some mixed signals and things going on that I think you have to pay attention to, even if the trend remains to the upside. We'll take a look at Apple, which was a nice play today as it continued to the upside after some nice action early in the week. You saw it break above this little pivot and close here above the 50-day moving average. So that's nice to see it close on the highs and break that pivot, which could open the door to a bigger bounce, which I think is in the cards for Apple. After we got that Samsung release out of the way, there's no news yet on a possible dividend or share buyback or anything like that. But I think Apple, after losing almost 40% of its value from the highs, I think was a compelling buy down there. And I think you continue to see strength on a bounce in Apple. BBRY was one I talked about this morning as one that you could potentially short as it was coming out with its new phones today. They were going on sale in stores, and as I expected, the demand wasn't that high. At least the initial stories about sales for the phone were not good, not positive. And it triggered a sharp sell-off in the stock intraday. And if you go back to the chart, you see a sharp sell-off after some initial bullish action in BBRY. We saw some potent selling back down below the $15 level, back below, I guess that's the 8-day moving average. It's came into its 21-day, but this is a stock that the long-term trend remains firmly to the downside, and that's the side of the trade you want to get on. Even if more recently in the short term, excuse me. The stock has been bullish and been able to bounce. I think you always want to plan your trades on the side of the longer-term trend. So it's short bounces in BBRY, not buy dips, in my opinion. DDD is a 3D printing name that we have been looking at a lot recently. Momentum traders, not DD, that's DuPont, DDD. Triple D is a 3D printing name. This sector has been very in play for momentum traders, as there's a lot of volatility, big ranges. Seem to be in play almost every single day, and it wasn't a blockbuster move today as we obviously closed off the highs, but this provided some decent follow through and looks like it might have put in a little bit of a floor after really fighting to stay around that 200-day moving average. I think I know we'll continue to get some tradable action in Triple D, and I think some of that action could come to the upside here rather than a lot of the selling that we've seen over the last couple months in this once high-flying stock. The banks are sort of ho-hum. Take a look at the XLF. Nothing real new there today. They are trying to find their footing, but remain a little bit weak. They didn't really participate in the rally today with the market, although the XLF did gap up and is still above its 21-day moving average. I think the more concerning thing is a stock like Goldman Sachs, which has been leading the sector, is firmly below its 50-day moving average. You want to see a stock, if it does break definitively below a moving average like the 50-day, you want to see it reclaim it very quickly. And today, Goldman wasn't really able to get any momentum intraday after a small gap up, and I think you could potentially look for more weakness in Goldman Sachs after a break of that key level, that 50-day moving average. Take a look at LinkedIn. It actually woke back up today. This is one of the sort of faulty signs, which you saw some weakening in some of these leading tech stocks that had been leading the market higher over the last few weeks. Over the last about month and a half, LinkedIn has been absolutely on fire since earnings. It's the grown up in the social media space and has really just surpassed expectations with every earnings report. Has really separated it from stocks like Facebook and Zing and some of these new social stocks because LinkedIn actually has a business model. But you saw LinkedIn wake back up today, which is a very positive sign to see money rotating back into leaders rather than us continue to see these laggard type plays be the only ones that participate in the rally. But you didn't see a ton of stocks like LinkedIn today that woke back up and pushed back towards highs. So I think there's a lot of mixed signals out there, and that goes to reinforce our idea that less is more right now. sit on your hands, and you don't always have to be super aggressive in the market. But great move today from LinkedIn. Netflix, on the other hand, is another one that has been very strong since earnings. It's one of the ones that was leading the market, had about a 100% move from that $100 level where it was pre-earnings. But I think Netflix feels like it's really hanging on by a thread at these upper levels right now. I mean, after such a huge move that is triggered a lot by short covering, I think when you get a short covering move that comes to a close and you have most of those weak shorts squeezed out of the stock, you can start to look potentially to the short side as the stock is propped up here at upper levels. And the 8 and 21 day moving average are starting to curl down. You know, it's right on the edge of upper level support here. You got a nice base to look at. I know Laz has been looking at Netflix short a lot, and I think this is one that has a lot of meat still on the bone if you're looking for a short trade. We could, you know, even if Netflix did retrace back into this little cluster of support right here around, you know, the 160 level, it would still be a 60% move in the last 2 months for the stock, and it wouldn't be game over or anything like that. That would be natural, healthy action for a stock, and, you know, nothing to really be concerned about at a macro level if you were buying dips in Netflix. But I think on a short term, it could be a potential short setup. There was a couple retail stocks that were interesting today. TJ Maxx was one that we listed on Off the Charts, the great newsletter product that Vicky Hadow and Scott contribute to, and I do some work on as well. We got a nice breakout above this little pivot that's around 45.50. Some great momentum today in a market that was very quiet and there wasn't a lot going on. You got a great move in a stock like TJ Maxx. I know a few traders on the virtual trading floor who were paying attention to that. You got a couple other retail stocks that performed well today. Walmart was Scott Redler's retail stock of the year in 2012, and it had a great, we'll zoom out and take a look at what he was looking at when he made that his retail pick of the year back in late 2011. You had this long-term base that Walmart was in that, you know, it's a decade-long base, which is an attractive thing if you zoom out as a trader to see as a possible swing trading candidate. And we got that breakout of that long channel. Got a little bit of a retracement back below the 8-month, in this case, moving average. But now we're back above it. You know, a very strong month right now. We'll go back to the daily chart for Walmart. And it woke up today in a quiet market and looks to be setting up very nicely. You could even call this a little bit, you know, a sloppy cup and handle pattern. Maybe from here, you have a little handle here, but you have, you know, a higher low here off the 21-day moving average, and it looks to be breaking above this pivot. So I think Walmart is one you could maybe see climb back up towards its 52-week highs as money rotates in this market. But, you know, that's about it. Like I said, it was a very quiet day. You had some interesting games in the NCAA tournament earlier today. Maybe that's to blame for the low volume. You have some Jewish holidays next week. You have some kids on spring break. Maybe some parents are taking off and heading out for the holidays with their kids. But whatever the reason is, it was a quiet day. Like I said, there are some mixed signals. And when you get this type of environment, it's best to just take a step back and don't put yourself in a position where you're going to be at the whims of a low volume, whippy market. And just wait for resolution to this upper level wedge type pattern that's developing, and that'll provide you the best risk reward going forward. That's John Darcy for your daily recap. Have a great weekend and enjoy your basketball.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.